Back here on Bloomberg Technology. It is great to be back. Coming up, Apple declares numbers and the market's most valuable player misses on revenue. We'll break down earnings for the second quarter. Plus, Microsoft officially launches its laptop to battle Google and Apple for classroom supremacy. We'll discuss the new Surface laptop with a top exec ahead. And our extended sit-down with Twitter COO and CFO Anthony Noto about the company's latest media deals and capitalizing on Trump. First to our lead. Apple shares falling after hours after reporting Q2 earnings that beat expectations, but revenues that fell short. The iPhone has always been the moneymaker for the company, but sales were basically flat year over year. Not terribly surprising given the anticipation for the next iPhone coming this fall. We're expecting a big design overhaul there. Apple also announcing it generated over $7 billion in revenues on services, 18% growth from the year-ago quarter. This is the sector CEO Tim Cook has said he expects to double over the next 4 years. Joining me now to dig into the earnings from our D.C. Bureau, Techonomy CEO David Kirkpatrick. David, great to see you. And in New York, Angelo
Welcome
Zeno.
Back.
Thank you, David. Angelo Zeno, also with us, analyst at CFRA, who's been listening in to the call. So, Angelo, I want to start with you. Let's talk about the iPhone. Obviously, this driving 2/3 of revenues for the company. Are you concerned that sales were flat?
No, I mean, I actually think when you look at the quarter here, overall it was fairly mixed. I'd say the one negative really was those iPhone numbers. But, you know, it's one of those quarters, I think, where you can only put so much emphasis on the iPhone. You know, you, of course, have that major launch later this year, and we think the entire miss here it can be attributed to the fact that consumers are really holding off for that next generation iPhone device. So overall, I mean, you're seeing a little bit of hit on the stock price, but it's something we would actually look past.
I did speak with Apple CFO Luca Maestri, who talked up channel inventory. They sold 1.2 million iPhones worth of channel inventory, which, if you consider those numbers, actually brings the number slightly up. David, what's your take?
Well, if I understand correctly, the sales outside of China actually grew. And Cook said that it's because they were seeing anticipation of future product being a problem. And it's just amazing to me how in China they are even more status conscious and technology conscious than almost any other part of the world, and they love Apple even still. But I tend, like Angela, to take a big picture view. This is not that big of a deal. I mean, if this company can make the move to services and software, which is its big shift they have to make to get their margin, their multiple up, then basically they're going to have a wonderful future, and I do think they'll come out with a great phone in the fall.
Let's talk a little bit about China since you mentioned it. We did see a 14% year-over-year decline in China. I talked to Luca Maestri about this, and he played up the positive things that they're seeing here. He said, we see a lot of positive signs in China. The iPhone 7, the best-selling smartphone in China. The iPhone 7 Plus also doing extremely well. Their services business hitting an all-time record there. Mac business growing double digits there. And he also said that we expect our performance in China to continue to improve over the fiscal year. He said that the second half of last year, they saw a greater decline than they've seen so far in the first half of this year. Angelo, you know, talk to us about what's happening in China and whether or not you're concerned.
Yeah, I mean, I think when it comes to China, you know, the consumers out there are, of course, a lot more price sensitive. I think you've got a lot more options these days coming out of China, given the emergence of many device manufacturers out in the local China region. That being said, when you actually look at how Apple has recently performed in the mainland China region, they've actually done very well. It's more along the other areas of the greater China area, like Taiwan, among other areas that have really taken the hit for Apple in that business. But overall, when you kind of look at that segment, at least it's performing better than it did earlier last year. So that's positive, and we do think that business starts returning to growth as you progress later into the year and you actually start seeing aesthetic changes to the next generation device.
Overall, you're also seeing a greater shift towards the larger sized iPhone, and Luca Maestri pointed out that this is the first time the bigger iPhone actually has a dramatically different feature in the updated camera, and the fact that more customers are buying the bigger phone means that the average selling price of the iPhone is going up. I do want to talk about what's going on with capital. Of course, they boosted the share buyback program, boosted the capital return program, but there's a lot of speculation about whether or not Apple is going to bring cash back to the United States. $257 billion Apple has now in cash overseas. And so there's a big question about what's going on with the Trump tax plan and whether or not that will impact Apple. David, what are your thoughts on this?
Well, I just continue to be amazed that a company could be this big, this profitable, and have problems like they have. Yeah, I think they will need to be seen as patriotic, and if there's a chance to bring money back, they will do that. But to me, I would go back to what I said before. The real question, if I was an investor in Apple, and I know some analysts have recently been talking more about this, is can they shift to be seen as more than just a device maker? Because their multiple is so low compared to Facebook and Google that somehow they've got to find a way to change that delta. And they don't even have to make very big of a difference for their stockholders to see an incredible increase, even from this astonishing $750 billion market cap they have today. So yes, they'll bring money back. That they have $250 billion to play with is astonishing. But the bigger questions are longer term still.
And we did ask Luca Maestri on our call whether or not they've laid the groundwork for planning to bring some cash back, depending on what happens with the legislation. He said it is not something that we are going to be speculating on right now because very much will depend on the details of what might get enacted. We obviously do a lot of scenario planning, but there is nothing to announce today. Angelo, any closing thoughts here?
Yeah, I mean, I think when you kind of look at the numbers here overall, I mean, we remain very optimistic on this year's. I mean, services growth of 18%, right in line where we expected, and continues to kind of run in line of that, doubling potential over the next 4 years. And, to the point that was just referenced, I think as Apple continues to expand outside of the iPhone base, or outside of the iPhone kind of revenue stream, I think that's an enormous positive for the company. It's going to come from the services business. All
right, Angelo Zeno, I'm going to let you get back on that Apple earnings call. It has just started. Tim Cook is speaking. We're going to continue to monitor the headlines. Angelo Zeno, analyst at CFRA. Thanks for joining us. David Kirkpatrick, Techonomy's CEO. You are sticking with me. Staying on earnings, a big shakeup at Etsy as the company reports its results. First quarter results coming in better than expected, but the online marketplace announcing a major restructuring. CEO Josh Silverman is leaving the company along with the chief technology officer. The company also cutting 80 jobs. Shares are skidding after hours trading on the news. Meantime, Advanced Micro Devices turning in its worst performance in more than a decade. In Tuesday's session, the stock tumbled 24% on a weak second quarter forecast. Coming up, we'll speak with Microsoft's Corporate Vice President of Devices and Services, Yusuf Mehdi, on Microsoft's fight for the classroom. This is Bloomberg. And we are continuing to get updates on Apple's third quarter results. CEO Tim Cook talking on the call right now, saying that he feels great about this quarter's performance, that Apple's services business is, quote, well on its way to becoming a Fortune 100 company. He says the App Store revenue is up 40% year over year, and that developer numbers are up 26%. We'll continue to monitor headlines as they come in. It is back to school, meantime, for Microsoft. The tech behemoth has announced the launch of its new Surface-branded device, the Surface Laptop. Aimed at college students loyal to Apple, the device is a departure from its computer-tablet hybrid, the Surface Book. Bloomberg Tech's Mark Gurman got a sneak peek at the new device. Take a look.
This is the new Microsoft Surface Laptop. We got an exclusive sneak peek of the computer at the company's Redmond, Washington headquarters. This laptop could shake up the market with its $999 price point, mixed with new technologies and a cool new look. It's lighter than the MacBook Air, coming in at 2.76 pounds. It's also draped in durable fabric that you normally find in high-end cars. There's even battery life that beats Apple's MacBook Air by a couple of hours.
We really want you not to worry about having to bring your power cord with you, not worry about battery life at all.
The Surface laptop comes loaded with a new operating system. It's called Windows 10 S. The S also comes from the world of cars, a nod to the luxury of the Mercedes S-Class. Windows 10 S is optimized for the new device. Microsoft says it won't slow down the computer over time, and it gets you to work quickly.
If you're from a dead, absolute powered down state, you hit the button and that thing will turn on and you'll feel it right away.
While Microsoft has Pro tablets on the market with attachable physical keyboards, and the Surface Book with a laptop-like enclosure, the Surface laptop is Microsoft's first pure laptop. Users have a lot of options to navigate it. You can boss around Cortana, Microsoft's voice assistant. It has the touchscreen of the Surface tablet.
If you have a Surface Pen with any of your other Surface products, you can use your pen on this product.
And it also has a funky new mouse that you can buy separately for $79.99. I don't think most people will need it.
This is the new Arc mouse that's meant to go flat, so if you want to put it in your pocket or your bag, you can do so. It turns off, so it saves you battery life. It's Bluetooth based. Once you turn it on, then it integrates with your product and you're right into the mode you want to be in.
That was our Bloomberg technology reporter, Mark Gurman there. And joining me now here in the studio, Microsoft Corporate Vice President of Devices and Services, Yusuf Mehdi. Yusuf, great to have you back here on the show.
Thank you.
So tell me about this new laptop. Why do you think it could take on Chromebooks?
Well, one of the things we're excited about with Microsoft Education overall is really a couple new things. A new version of Windows that's designed to be more streamlined, simple, and give you better performance. It's called Windows 10 S. A range of new devices from our OEM partners, starting at $189 with an HP Stream and going up. These will give you things like pen, touch, ink, and the ability to run Minecraft. And then if you go up to higher education, then we have the new Surface laptop, which Mark just showed you there in the video. And this is really like the perfect balance of personalization, performance in a 14.5 hour, 2.5 pound form factor. And we think it's very compelling for people in higher ed.
But Windows 10 S doesn't have the cloud and web-based system that people use Chromebooks for.
It's actually better.
Okay.
So basically what it is, what Windows 10 S does is it's all of Windows as you know it. So you can do things like VR, 3D, pen and ink, but you get the two benefits, which is you get just the apps that come from the store. So you get that safety, you get that security, you get that performance, but you get none of the drawbacks of Chromebooks. So you get to work offline. 4.4 billion people in the world don't have internet connections. You get full Office. You get the ability to run Minecraft. You get some really rich experiences, and that's how it sets us apart. And I think leapfrogs the Chromebook.
Do you think you can get share from Apple in the college kid market?
I absolutely think we've got a great value prop. The new Surface laptop has better battery life than any MacBook that's out on the market today. It's faster than the MacBook Air and the MacBook Pro 13, and it's also thinner. And so the combination of all those things, again with the Windows on it, it's very differentiated.
So Apple fans might say they're not so fond of the features of Windows 10 S. You know, what do you have to say to those people?
Well, look, the good thing is the competition is you can choose the products you want. I mean, Apple makes great products, so we definitely admire that. I think what's great about Windows 10 S is you can do some things you can't do on the Apple products. Virtual reality is really happening on Windows. That's 3D capability. If you like touch, if you like pen, these are all unique things on a laptop that you can't get.
Surface sales declined considerably last quarter. The Surface Pro line is getting a little old. You know, what's the hardware strategy?
Well, it's a couple fold. So number one, we're in Surface to create new categories of computing. And you see that with Surface Book, Surface Studio, even the original Surface Pro. And then what we want to do is we want to grow the overall Windows ecosystem. So HP, Dell, Lenovo, and that's happened. If you look at the last year, we've grown share in large part because of the pioneering work in Surface. In this last quarter, it's true, we've seen more price competition from OEMs that have kind of impacted, and we're in the middle of a transition. The Surface laptop is new today, and you might expect to see an update to Surface Pro 4 coming soon.
Satya Nadella came in, the CEO of Microsoft, saying cloud first, mobile first. Cloud first seems to be going really well.
Yes.
Give me the progress on mobile first. Where are we going?
Well, the way I think about mobile first is we're all in on mobile in the sense that all of our software will run on any device that you own. So Office will run on iPhone and Android. Minecraft will run on iPhone and Android. Our management tools run across all those devices. So we embrace the world as we see it today, which is people use multiple devices, and they use Windows PCs and laptops and notebooks.
So Windows 10, give us an update.
Well, Windows 10 has been doing great. It's been many months since we reported. We had over 400 million monthly active, 300 million plus use it every day for 3.5 hours. It's the fastest adoption in corporations we've ever seen, and we're seeing great deployment on that. New applications coming. We couldn't be more thrilled with the progress on Windows.
All right, Yusuf Mehdi, thank you so much for joining us and giving us the update in person. Microsoft Corporate Vice President of Devices and Services on the new laptop.
Thanks, Emma.
Coming up, India-based outsourcing firm Infosys plans to hire 10,000 U.S. workers as President Trump overhauls the H-1B visa program. We'll dig into the political and business ramifications of this move next. And we're continuing to get updates on Apple's third quarter results. CEO Tim Cook still speaking on the call right now, saying there's been strong growth in Beats sales. Cook also saying revenue from wearables, including the Apple Watch, AirPods, and Beats headphones, is the size of a Fortune 500 company. This is Bloomberg. A story we are watching. Looks like Jared Kushner, President Trump's top advisor and son-in-law, omitted a few items in his government disclosure forms, namely his stake in a real estate tech company. According to the Wall Street Journal, Kushner omitted his stake in Cadre, which has ties to Goldman Sachs and investor George Soros. An attorney for Kushner says a revised version of the disclosure form that includes Cadre will be made available once ethics officials have looked into it. Meantime, India-based Infosys plans to hire 10,000 Americans in the next 2 years. The hires are part of the outsourcing firm's plan to open 4 tech and innovation hubs in the U.S. focused on artificial intelligence and machine learning. Infosys' announcement follows criticism from the Trump administration that outsourcing firms are unfairly taking jobs away from U.S. workers. Joining us now to discuss, our Bloomberg editor-at-large, Corey Johnson, with me here in New York, of all places, and just, hanging out. Not much. And David Kirkpatrick in D.C., our CEO of Techonomy.
I'm in Washington.
I know, David, you're missing out on the party. So
I feel left out, but that's all right. That's my choice.
We're gonna make sure to include you. Corey, what's going on with Infosys?
Politics. This is about politics. This is very clearly an attempt for Infosys, one of the largest consumers of H-1B visas, to get themselves on the right side of the story that's been going against them, and been going against them for quite a long time. It's one of the reasons that President Trump was able to become President Trump, because he was able to really capture this notion of something gone awry with the American workforce, and Infosys as a principal offender there. A lot of the stories in the far-right media really calling out Infosys in particular as a company that's hurting American jobs. It's no accident that this isn't just a plan of 10,000 hiring, but 10,000 people being hired in hubs. The first hub announced where? In Indiana. So in Indiana, really focused on a place where President Trump won, where Vice President Pence hails from, and I think they really want to make a mark in that state for political reasons.
Dig a little deeper here. I know you've been taking a look at the numbers and some of the other companies that are really affected by the H-1B visa policy changes. So
the outsourcing firms are big consumers of the H-1B visas. While we have bigger and better known companies like Apple and Intel and others talking about it, when we look at the numbers of who the biggest consumers are, they are very much these kinds of outsourcing firms. I think we've got a graphic that demonstrates how these firms are among the biggest consumers of H-1B visas.
And what jobs are they doing?
They're doing all kinds of jobs, but the concern is that these jobs are actually quite replaceable. And the concern is that these aren't very unique jobs, even though they're supposed to demonstrate that in order to get an H-1B visa. When you have the companies you can see from Tata, Infosys, and Cognizant, an Ohio-based company, that these are the kinds of jobs, these sort of tech support jobs. It isn't inventing the next driverless car, next amazing optical semiconductor, but it's in fact real tech support kind of jobs that are filling these H-1B visas. And so I think this is very much should be seen as an announcement for announcement's sake.
David, I know you've been thinking about this one a lot. What's your take here?
Well, I think Corey's totally right. It's a political move, but it's justifiable because, honestly, this program has been abused. This isn't one where Donald Trump really has it right. I think these companies are bringing in people and paying them less than Americans would get for similar jobs. The American companies that bring in workers under this program pay them something like $50,000 a year more on average than the Indian outsourcing firms that bring people in. So even if you're coming in from the out of other countries, and 70% of workers on this program are coming from India, even under those circumstances, you're going to make a lot more if you're working for an American company. I think the Indian companies have a serious perception problem they have to address, so it doesn't surprise me in the slightest that Infosys is doing this.
Corey, how competitive is the H-1B visa program?
Well, it's enormously competitive. There's so many more applicants than there are spots available, but and to a massive degree. And it is a way for some of these people to actually get green cards and be in this country. We have friends who are some of those people who've followed that route in order to do that. We've got Bloomberg intelligence analysts analysts who've done that very same thing. But I think that fundamentally, what we might expect is some changes in the H-1B program to try to fix these problems and fix the problems of workers getting paid less, coming here and sort of being stuck with these jobs, getting paid less than American workers, and an ability for companies to increase their margins when they hire such consultants, but not a way sort of to a better life, and for America to continue to lead in technology.
David, this is something that Mark Zuckerberg has personally taken on, trying to get more quote-unquote skilled workers into the United States. How does this affect the Facebook and the Googles of the world?
Well, it doesn't directly affect them that much, but I think that what will affect them is if we can find a way to open up the doors to allow more people to come in to do a variety of jobs that are needed with fewer restrictions, while still being able to protect American jobs. And that's a tough balancing act, but all the big tech companies absolutely feel they would benefit, and the American economy would therefore benefit, if they could bring in more people from outside the United States, and if this program was not so severely restrictive as Corey was just saying.
Last word.
Well, I mean, look, John Doerr has for years been saying every time someone graduates from Stanford, we should staple a green card to their diploma, that there are workers who can really benefit the economy. And so this notion of this anti-immigrant notion about stealing jobs, particularly in technology, is a really important issue here, because a lot of people want to start businesses and change technology, and they're not going to have the chance.
All right, Corey Johnson, our Bloomberg editor-at-large, David Kirkpatrick, CEO of Techonomy. You're sticking with me. We're going to talk a little bit more about Apple coming up. Also, Twitter is rolling out serious plans to live stream content in news, music, and sports. Our extended interview with Twitter COO and CFO Anthony Noto next. Plus, we will recap the story of the moment. Apple earnings out after the bell. The company announcing it sold fewer iPhones than expected as customers wait for upgraded models. 25 minutes into the call, we're monitoring the headlines. Apple stock continuing to edge lower. This is Bloomberg Technology. I'm Emily Chang. Let's get back to our top story, Apple's second quarter results. The stock casting a huge shadow over the market. It is the top performer in the Dow this year with a 27% gain. Wall Street analysts have 39 buys on the stock, and Gina Martin-Adams, chief equity strategist at Bloomberg Intelligence, joins us now for a bigger picture look. Gina, thanks so much for joining us.
My pleasure. Thank you for having me.
We've been watching earnings up 27% year to date. Is it frothy? Is it worth it?
Well, I guess investors are willing to pay for it, so who's to say, right? It is one of the strongest performers in the tech sector and in the broader market. I think it's interesting because investors seem to be looking forward to better times ahead, because when you look at Apple's results over the last couple of quarters, they actually seem to be losing a bit of their punch on traditional earnings and revenues. If we look at Apple's share of the index, for example, it actually peaked several years ago. It's been on a comeback so far this year as investors have piled back into the stock. But I think the company has a lot to prove with earnings, frankly, going forward.
Now, I want to take our audience into the Bloomberg here and show a 10-year chart. Just how heavily weighted Apple is within the Nasdaq. I mean, it is such a massive company, and any small move can have such a big impact on the markets. Talk to us a little bit about that.
Yeah, within the S&P 500, it's by far the largest stock. It also holds the most cash. It has the largest earnings share. So from a number of angles, when Apple moves, the market moves. We saw that a little bit today, but luckily for us in the S&P 500, it's a bit more diversified. Nasdaq is a tech index, right? You've got some biotechs in there and a few tech-light names, but it is a tech index. If you look at the S&P 500, tech is a big part of the index, but it's not the entire index. So it does tend to move the broader markets, but a little less so when you look at a more diversified index like the S&P.
Apple stock moves on average 4.7% a day after earnings. What are you expecting?
Yeah, who's to say where it moves on any single day? But what I can say is that tech stocks so far this earnings season, there's one thing that stands out, and that is tech stocks that guided lower on sales have been punished by the market. So the fact that Apple missed on revenues and they guided revenue expectations a bit lower could be a little bit troublesome for the stock tomorrow. Otherwise, I think investors, frankly, are looking through this earnings season and looking for better times ahead.
Let's talk about the rest of the earnings season. We've got Facebook and Tesla on this week, two companies that also, a lot of exuberance around them. What are you watching?
It's more tech. I mean, it's tech, right?
Tesla's the most valuable car maker in America now.
It is. And considering what happened with auto sales earlier today and what happened with first quarter auto sales in the GDP report last week, It's interesting to see that Tesla's doing as well as they are relative to the rest of the auto industry. And I think it's a tech play. Frankly, you've got this sort of uptrend for all tech companies across the index, and the rest of the index has more skittish performance, in particular that auto sector. So I would lump Tesla in with the techs. Pressure is on the company to guide for better expectations going forward.
All right. Gina Martin-Adams, Bloomberg Intelligence, thanks so much for stopping by.
My pleasure. Thanks for having me.
Now, Twitter wants to be the place to go for all of your live video needs. On Monday, the social media company announced it'll be expanding its live streaming portfolio with 12 new partnerships in news, music, and sports. They announced 16 deals overall. Bloomberg News is among Twitter's video partners. I spoke with Twitter's COO and CFO Anthony Noto and asked about the work that has gone into making these deals happen. Take a listen.
We started our live experience in the fall 2016. We've had 2 quarters of great success, and on the back of the 800 hours that we delivered in the first quarter of 2017, we decided that we were going to go all in, and we really went out and pushed really hard with our partners to take our live streaming content to the next level across sports, news, and entertainment. So we're going to build significantly on the 800 hours we did in Q1. It's aggregating a very large audience. We're seeing great interactivity with the conversation on Twitter, and so our goal is to be what's happening. Live makes us better at what's happening and makes us faster, gives us more comprehensive selection, drives more discussion, and we can personalize it for the individual user because we know their interest based on who they follow. So it's a perfect fit for Twitter, and we're delivering a really unique experience. And I think these 16 deals are a real testament to the success that we have with this product, great quality video, and the best of the conversations on Twitter about that event.
Let's talk about Twitter's video ad strategy. What are the biggest growth opportunities that you see, and how do you scale it?
Well, it all starts with the audience. What does the audience on Twitter want? And for 11 years, the audience on Twitter has already been talking about live events as they unfold, as well as TV. And so what we wanted to do with this strategy is to bring that video onto the screen with a great conversation on Twitter and consolidate it in a one-screen experience. And that drives more selection, it drives more discussion, and the content gets distributed even faster. And we saw that throughout the fall and in the first quarter of 2017. And we want to take it to the next level. We want to be a dependable place where people can come to see what's happening in sports, news, and entertainment, as well as esports. And so these deals reflect that dependability. In fact, with Bloomberg, we launched a 24/7 network that will launch in the fall. We're really excited about that. It leverages the strength of both of our companies. And with Stadium, we announced a 24/7 linear sports network, live games, live news and analysis, live highlights, and live guests.
During the earnings report, you said it would be a long road to revenue growth. When do you see turning revenue around?
Yeah, as we said in the earnings call, we don't today have visibility on seeing the revenue trend improve. That's based on a number of factors. First, we need advertisers to recognize the significant increase we've driven in ROI. ROI is much more attractive now than it was 6 and 12 months ago when they made their decisions on what they would spend today. And so not only is our audience accelerating for the 4th consecutive quarter to 14% growth in daily active users, our prices are down 60%. So the ROI has improved significantly. We need to grab them and get their attention so they see that. Part of today was making sure they understood that significant improvement. The second part of today is how can they be a part of what's happening? And we think we're very unique in that way, in that Twitter is what's happening, but we also have an audience of influencers, and we have an audience that's leaning forward in a discovery mode, so these brands can actually become what's happening.
Let's talk a little bit about user growth, because that has been a bright spot. You added 9 million users last quarter. Where's that growth coming from? Is it coming from Donald Trump?
In the quarter, we talked about 2 factors. The first, the primary factor, was the benefit from organic growth, some of which was seasonality. And the second factor was product and marketing. And product has actually started to impact our growth for the last 4 quarters. And it's been a long time since that's been the case. And in fact, in the first quarter, the product improvements that we drove was the largest contribution that it's had to MAU growth in a very significant period of time. We can't causally say whether or not the increased focus on politics and newsworthy events is driving the growth, because we don't have a holdback to measure that. But we did analyze some correlated factors. There was an increase in our new and resurrected users and the percentage of accounts that they follow that fell into news and politics. But beyond that, it's really hard to measure that specific impact.
So is there any way to give us a little bit more color on whether it's the president using the platform itself or his followers or greater engagement with the president himself?
I would say product and marketing has been the consistent trend on the 4 quarters of acceleration. We'll continue to analyze the data. Listen, Twitter benefits when influential people in the world use our platform to tell what's happening. We encourage that. We love the discussion. We love the conversation that's happening. And so the more it happens, the better we are going to be at showing you what's happening in the world and what's being talked about. So we'd love it if every world leader used Twitter as their primary mechanism to talk to their constituencies.
Twitter is working hard to crack down on abuse and harassment. It is still a problem. I can say that as a woman using the platform. I'm often on the receiving end of it. Why should someone like me stick around?
Our number one focus starting at the beginning of the year was to make sure that we made Twitter a safer place for everyone to use the platform. We understand that Twitter's a microphone to the world, but that has to be within an environment that's safe, or people won't use the microphone, or they won't come to see what others are saying. And we've made great strides in just the first 3 months of the year, and it's a focus that will continue on until we get it exactly right. We have had significant improvements. We talked about that on the earnings call as well. Jack talked about the improvements that we've seen, and we've only started in the impact that we think we can have.
Do you see any reevaluation in, what counts as free versus hate speech and where Twitter draws that line?
I think we have some pretty clear-cut rules, but there are things that ultimately will be gray, and we have to make the best judgments. And so we want to make sure that it's a safe place for the audience to engage, and we will continually reinvestigate and reevaluate things that we should consider changing.
So as you're striking all of these new streaming deals, it's almost more important than ever to make sure that the content that is going on the platform, is not hateful, is not abusive. What kinds of new mechanisms could you see down the line to further police that?
Sure. We've already provided tools for users themselves, such as being able to mute words that you may not want to see in your timeline and tweets. You also can block, and you can report much easier. We also have abilities to give you safe search, which again eliminates some of the things that you may not want to see. Within our live experience, we're actually creating an experience that's not just a live video, but we are using machine learning technology and algorithms to deliver the best tweets about that topic. And so we're completely deciding what is seen in those timelines, and we make that appropriate for the content that we have on the platform and make sure that it's safe.
Sources have told me you're kind of like the soul of Twitter right now. And obviously, we know you've been working very hard. How Twitter is navigating some rough patches. How would you describe how you're approaching your job as COO and CFO, and sort of explain this idea of being the soul of the company?
The first thing I'd say is I love working with Jack and the rest of the leadership team. We approach running the company as a team that's focused on specific priorities, and we divide and conquer against those priorities. Titles are what the world has decided are our responsibilities, but at the end of the day, we divide up the priorities amongst our team on what's most important to accomplish. I wouldn't want to work with anyone else other than the team that I'm working with at Twitter right now with this team, including Jack. He's an inspiration. In today's new front, our first new front, Jack stood up at the end, no rehearsals, no script, and just delivered the heart and soul of what Twitter is. And so I live and breathe every day to help that vision come to life, because that's what made Twitter so special over the last 11 years. He couldn't be a better partner, and our teammates couldn't be a stronger team.
What is it like, though, working with a guy that is CEO of another company?
It can be daunting, and it can be inspiring. Jack is there for 100% of the decisions. He has insights and has license to make decisions that none of us as executives or any outside executive could ever make. So it's a powerful relationship to have at the company, and I think it's made us better in the last 2 years that he's been at the helm of Twitter.
On that note, we talk a lot about the potential drawbacks, right, of running two companies. Are there any benefits that come with that?
It's funny. The media wants to ask us about having dual roles. I don't ever think about it until the media asks me. When I have something to talk to Jack about, we talk about it. When we have something to discuss as a team, we discuss as a team. Like I said, we're together for 100% of the decisions, and at the end of the day, that's what a company is all about.
So you're still looking for a CFO. Any progress on that?
We're still looking for a CFO. Once we have news, we'll share that with you.
Twitter CFO and COO Anthony Noto there. Coming up, we'll continue our coverage from the Milken Institute Global Conference. Box CEO Aaron Levy joins us on the rise of automation and his thoughts on Trump. And we're staying on the story of the moment, Apple's second quarter earnings. CEO Tim Cook just speaking on the conference call, giving his thoughts on enthusiasm around China despite a decline in revenue there. This is Bloomberg.
First half revenue was down 13% year over year, about a third of which was attributable to FX. That's in contrast to a 32% revenue decline in the second half of last year. Our March quarter results were in line with our expectations and similar to the year-over-year performance we experienced in the December quarter. We continue to be very enthusiastic about our opportunity in China.
Now to our continuing coverage from the annual Milken Institute Global Conference in Beverly Hills, California. Bloomberg's Scarlett Fu caught up with Box CEO Aaron Levie and asked for his thoughts on the Trump administration, as well as the rise of automation. Take a listen.
We have a lot of cause for concern and to be talking about the subject of technology-based automation and what happens to employment as we have new innovations like artificial intelligence, robotics, and other sort of advancements in technology. And I think we have to be concerned about it because we have to really start to think about what does the future look like in 10, 20, 50 years from now in a bunch of different industries, whether that's manufacturing or logistics and shipping or healthcare. But in general, I'm personally, and I think a lot of technology companies are optimistic that in many respects we're going to create far more jobs in new industries and in new areas that we can't yet foresee than the ones that we reduce or that we replace. And the challenge is figuring out how do you transition in as smooth of a way as possible to those future jobs. Because we know of the jobs that go away, in many cases, or the jobs that are reduced, we don't always know what the future jobs look like. And so we don't know what to prepare people for in the future. And so I think in general, it's a really healthy conversation to be having this. I think that we need to probably ease away from being on sort of both sides of the pendulum, all the jobs go away, or there's going to be a massive boom in jobs, and really think through the nuances of how do we prepare our country and a lot of our industries and businesses for a long-term transition to a new kind of economy.
All right, so as you look ahead, what is the most likely path of automation and machines at least taking some of the jobs in the next 2 to 3 years?
I think, you know, in the space that we're in, where we help businesses share and collaborate and work on their information in new ways, I think you're going to see a lot of automation and intelligence in our software that makes us as individuals more efficient. And we can then do more with our time within the workplace or outside the workplace. And we can make decisions more quickly. We can collaborate and connect ideas much more rapidly. And it'll ultimately have the impact of moving us into the future faster. It won't necessarily replace any specific job as much as really increase the speed and the scale of what we can do in our organizations. Over the more medium and long run, I think you will have some discrete jobs that are made so much more efficient that you have fewer of them in the industry. Like maybe we're talking a lot about sort of the roles that go into shipping and logistics or taxi drivers. At the same time, though, as soon as you make one of those industries more efficient, what you tend to see is consumption increases of those services, which then creates new ancillary and adjacent markets that actually see an increase in jobs.
Right.
So the question is, if we can make things like shipping and logistics more efficient because it costs less and we can deliver the service for less, then maybe you bring even more manufacturing back into America because the delivery speeds of products and services actually now is so fast that we want to manufacture things as close to this, the buyer as possible, and that now creates a new set of jobs in the manufacturing industry. So I think we have to think about this across an entire system as opposed to the individual jobs that will be replaced or displaced.
You've been very vocal in your opposition against Donald Trump and his policies before as well as after the election. What are your biggest concerns right now about how his policies impact technology and your company specifically? Well,
I think our biggest concern is really at the policy level. So we want to make sure that we have a structure of our industries and the government that works for the next 10, 20, and 50 years of our economy. And we have to recognize that economy is going to look very different than it does today or how it did 10 or 50 years ago. And that's going to mean a number of things. It's going to mean that different industries are going to have modern digital policy applied to their industry, like life sciences or automotive industries or aerospace. We need to think about what are the modern ways that we should regulate these industries to unlock as much innovation and growth as possible. Secondarily, we have to make sure that we're actually bringing in as much talent as possible into the country that helps us build these innovative companies. And we have to make sure that we can grow as much talent from within as possible. So that's things like STEM education, that's things like job retraining programs. And then finally, we have to make sure that there's a message and a long-term roadmap of how we're going to get our country there. We need to understand the philosophy of the government and what we collectively understand that future to look like. And that's another thing from a communication standpoint that hasn't yet happened from this administration.
Box CEO Aaron Levie there. And a quick programming note coming up on Bloomberg Television and Radio Wednesday. Tom Keene sits down for a conversation with former Fed Chairman Ben Bernanke. Look for that convo live, 12:30 p.m. New York, 5:30 p.m. in London. And we continue to monitor the Apple earnings call. Earlier, CEO Tim Cook gave his current outlook on wearables, saying the Apple Watch and Apple Watch sales have doubled year over year, calling it the best-selling smartwatch in the world. This is Bloomberg.
When we combined Apple Watch, AirPods, and Beats headphones, our revenue from wearable products in the last 4 quarters was the size of a Fortune 500 company.
We're continuing to cover Apple's second quarter earnings report. The world's most valuable company now sitting on a $250 billion war chest. I've got a chart here on the Bloomberg. You can see the massive cash pile, $257 billion in cash, 93% of that overseas. Investors have been speculating that Apple and other cash-rich companies may bring offshore funds home under a tax plan floated by the Trump administration. Apple CFO Luca Maestri told me that whatever happens very much depends on the details of what might get enacted, that they do plan various scenarios, but there is nothing to announce today. Now let's take one more look on how the stock is trading after hours. Apple shares edging lower, revenue forecast and those crucial iPhone sales coming in below analysts' expectations. Customers are holding on to their iPhones longer. They're likely waiting for the iPhone 8 this fall. That's at least what we are expecting. We're expecting a big design overhaul there, potentially a new screen going end-to-end, a better camera. CEO Tim Cook just said on the call that he thinks people are waiting for the new iPhone. And on tap this Wednesday, earnings from Facebook and Tesla. Both stocks have seen massive growth so far this year. We'll have coverage and reaction throughout the show. And that does it for this edition of Bloomberg Technology on Wednesday. We'll hear from venture capitalist Chamath Palihapitiya, founder and CEO of the Social Capital Partnership and co-owner of the Golden State Warriors. It has been wonderful being back with you all. This is Bloomberg.